Hello, this is Brian Shannon from Alpha Trends Blogspot. It's Monday, the 27th of November, 2006. And let's go ahead and take a look at the markets. The S&P 500 on the screen right now, looking at the spiders, they closed down 1.3% today. So the market finally had a little bit of a pullback in here. And really, if you look at, just drawing a trend line that I think, what we want to try and do, there's a lot of different ways we can look at a trend line and draw it. We could draw it off of the low here and then say the uptrend line has been broken. But I think it's better to take this move over here because this has more areas where it's been hit, and it really does what I consider to capture the essence of the trend. And realistically, no damage done to the trend. This market we know has been overbought for quite a while, and it's just a pullback. And when everyone runs for the exits at once, it gets pretty ugly like it did in there today. The thing that concerned me most was that we had very little. In fact, we had no bounce whatsoever. The market closed right near its lows for the day. And if you're one of the people who are trying to pick a bottom intraday by saying, well, let's look at support at the 10-day moving average or the 20-day moving average, I want to take this opportunity just to point out once again that moving averages aren't always support. They're an area where they tend to act as support in uptrends, and you'd never want to buy just because it's at a moving average, just like you never want to buy just based solely on something like Fibonacci. And we could take a look at the lows from earlier this month and do some Fibonacci there, and you could have made a case to make a purchase at the 38.2% retracement. But that's just an area where it tells us we ought to get interested in and see if there is support taking shape there, and that only occurs by looking at shorter term time frames. So when we look, for instance, at a 5-minute time frame, what we see here is we just see a nice solid pattern of lower highs and lower lows. When I say a nice solid pattern, based on classic technical analysis, it's not necessarily nice if you were long, obviously, but there was no reason to be involved in here on the long side today as the market just made this series of lower highs and lower lows. Did it get overdone on the downside? I don't know. It might have been overdone on the upside. Our job's not to question the logic of a move, but just to look at it and say what makes the most sense right now. Well, realistically, we've still got a rising 50-day moving average, so I'm going to say this market is still innocent till proven guilty. Maybe we get another couple days of pullback. I don't know. We'll see. I think it pays. The best thing to do in here is to take it very slow the next couple sessions while the market attempts to stabilize, and where we can start to see basically let the dust settle a little bit. I think the level of support that we're going to watch is pretty close to 138. I would think maybe we get a little bit of support in there. Friday or over the weekend, I had mentioned that it gave me a little bit of concern that the market was making these lower highs and lower lows, and then it did just fall completely apart. It went right through that 140 level that we were 139.80 to 140 is where we were looking for support. Then we were thinking maybe a test of 139, and it sliced right through there as well. And that's another point, is just because it was a prior level of resistance doesn't mean it will become support. It's a potential area of support. Where the market finds support is when the buyers step it up and come in and overwhelm the source of supply. That didn't happen today, so we've got to be very careful. The short-term trend is broken. The short-term trend is down. The intermediate-term trend, just based on Fibonacci, you can say is still intact, but damaged, and the longer-term trend is clearly still higher. If we take a look at the semiconductors, what we were looking for in here was for the resistance near that 35.65, 35.70 to be broken before we took any speculative long positions in here, and that was above this level. That never occurred, so there was no reason to be caught in this mess. This market has been sideways for the last 2 weeks, and today we had support near that 35 level broken. Now the burden of proof is on the buyers. Let's see what happens if the market stabilizes. We would look for the potential for a source of supply up near this 35 level. We've had support there in the past. Those buyers might be looking to get out on a rally up towards that at break even. We'll see. It's tough to say. If we look at the daily time frame in here, what we're going to see on the semiconductors as far as a daily time frame is that It broke that 10-day moving average. Now it came down to the conjunction of where we're finding the 20, the 50, and the 200-day moving average. We've got this prior level of resistance that seems to maybe have acted as support as well. So I think an important area has been tested near that 34.15. If you remember, that's where it kind of broke out a couple weeks back. So 34, was it 34.15? It was 36.15 that we were looking for on an upside. It was 34.45, and that's the exact level almost that this market closed at. So it's in an important area right here, and we're going to just have to be very conscious of playing a strong defense in here right now. The Nasdaq 100, if we look at the Qs, what we see here is a market that's still in this fantastic uptrend, and it's a one-day pullback so far. Will this be the day 6 months from now that we say, hey, that was the high? Maybe, but I wouldn't bet on it, only because a market top doesn't occur in one day, just like a bottom doesn't occur in one day. They're a process, not an event, and they're motivated by a gradual overwhelming of the buyers by the sellers taking control. Realistically, where do we have the best support in here? Probably down near $43 a share in the Qs, and that's going to be where maybe we find some stabilization. We'll keep an eye on this 20-day moving average at 43.30. There exists the potential for sellers to slow down their sales in that area. Buyers might start to nibble in that area as well, and we might get that gradual shift of supply and demand that starts to favor the buyers once again. But looking at a 10-minute time frame, you can see that we've got all these moving averages heading lower. So there's damage done in here, and there's no reason to be looking to buy right now. If we look at the 30-minute time frame, we can see that this recent rally, obviously, the trend has been broken. And if we then take a look and see just where this sell-off has taken us so far in relation to that recent rally, you can see that we've just retraced about a third of it right now. Maybe down near 43.20, which is again close to that 20-day moving average. That's where we'd have a 50% retracement. So don't get too aggressive on any purchases in here by any means over the next couple of days. Wait for the market to stabilize and show signs that the buyers are starting to take back control. We don't have any of those signs yet. The mid-caps as well. Same story here. I mean, the damage was pretty widespread throughout the market today. And in the mid-caps, I don't know, where's my symbol, MDY. In the mid-caps, what we were looking for over the weekend was, I said, maybe we get an eventual test of this prior level of resistance at 145. I didn't expect it certainly to happen today, but we got that. It's back to these prior highs where we had that nice move from about a week and a half, 2 weeks ago. So the market's pulled back. Again, I don't think it's anything to be overly concerned about. Short term, you should have been stopped out of your trades at this point, and now we've got to wait for some stabilization in this market before it's safe to really enter the majority of stocks on the long side. Good news is there's still going to be good stocks setting up on the long side, and there'll still be good short opportunities. Let's take a look at some of the stocks we've mentioned recently. First of all, United Microelectronics, symbol UMC. We got involved last week over here at about, I think it was 325, and I had suggested raising your stop in there to $3.36, so no damage done in there. We still got a nice profit worth protecting. I'd raise your stop at this point to $3.40 if you're still long the stock. Conexant, symbol CNXT, we'd gotten involved at 323, and I'd suggested you raise your stop to $3.20. So if you were in Conexant, you should have been stopped out at this point with a 3-cent loss. And that's the thing. That's why I always keep tight losses. You never know when the day is going to be when we have that big sell-off like we did today. We were involved in Avanex around 206, and I had suggested that your stop go to 201, so should have been stopped out of that with a nickel loss in Avanex. Brooks, we were looking at over the weekend as a potential long side candidate for today, and BRKS. What is up with my machine? Okay, Brooks, we were looking for a rally above $14.60. That didn't occur, so there was no reason to get involved in BRKS today. COGO, we were also going to buy in strength. This one today, we were going to buy above 1705, so it should have been bought right around that 1705 level. and we were going to set our stop at $16.78. So that was stopped out with a loss of about 27 cents. ISIS we were looking for on strength, but it gapped higher, so it showed too much strength to start out with. Let's take a look at the 5-minute time frame in here. It showed too much strength right away, and then it just kept pulling back. So there was really no reason to get involved in ISIS today. And Under Armour, I suggested taking a look at. I thought it looked like it was going to move higher, but it started out on a very strong gap. So that's a tough stock to trade, which is why I didn't recommend any specific levels. So I'm not going to continue to update that one either. FormFactor was a short sale that we were looking at. We're looking to get short below on this stock below 38.55. So that occurred right here. And our stop was 39.03 up in this area, so we didn't get stopped out of the position. And I would say right now, with better than $1.50 profit, you probably want to either take that profit here or put your stop at 37.35. And what I'm going to officially say is, if it opens within 20 cents of this area, I would suggest you take half of your profits in FormFactor tomorrow and put your stop at $37.35 on the remaining balance. So that was a nice one, and it shows that you always have to be open-minded to the possibility of a short sale, even when the market seems as strong as it is, because that $1.50 profit in that stock should have made up for any small losses you got stopped out of in these other positions. Zoltek was another short sale candidate, and what we were looking for in there was a rally first to 22.95. We did get that rally to 22.95. Let's go to a 5-minute time frame because we've got that half day of data where you can't really see. But we got that rally. It took it right up to 23.10, in fact, and then we were going to sell it short below $22.90, which occurred right in here. So our stop at that point was going to be $23.20. I would say lower your stop to break even at $22.90 in Zoltek.